I'm the best and I'm the best group. I hope that is not the way you guys are taking it, because that's not the way I'm trying to paint the picture. I'm just trying to paint the picture that out of a lot of people out there that are not, don't have the credibility, don't have the credentials to be doing this type of thing, just be very careful of the information, where you're receiving your information from, and how much importance you put on the information that you get from other people, okay? Because at the end of the day, a lot of people will tell you what you want to hear, but a lot of times what you want to hear isn't necessarily what's going to make you a lot of money. So, I mean, you can literally, there's hundreds of Telegram groups that you can just go on Facebook and you can find somebody and they've been trading for 4 months and they create a Telegram group because they think they're the best trader in the world, and they'll give you a signal, right? If you want a signal, if you want to know where to buy and sell, they'll give you a free signal, but doesn't necessarily mean that it's quality. So just be very careful where you get your information from, okay? So that's just a little bit of a recap from last week, why it's so important to pay attention to these webinars and get on here, and because you can see that there's plenty of opportunity if you were like a scalper or an intraday trader to place trades last week. So I'm actually going to unmark these because by the end of this webinar, I'm going to go over all 4 of these pairs, which I feel are going to have some very nice setups for this week. We'll get into those in just a moment, but to just kind of swing back to the beginning and just to give you guys some updates very quickly. Pretty big week. We're going to look at the news in just a moment, but pretty big week for positive traders as well. My course is being released here on Tuesday the 15th. So I'm not going to do too much self-promotion on here, but I do have a lot of people watching and a lot of people that watch these that have been following me for some time as I've been building this course for the past 2.5 months and getting excited for me to drop it. And I'm very excited for me to drop it. So if you just want some more information on that, just make sure you're following. Best thing to probably follow me on is Instagram. I also can just transfer over my Instagram stories onto Facebook, so you can follow me on Facebook too, but I am definitely the most active on Instagram. That's where you can find all of the information. And just in short, and then I'll stop talking about the course, is that as far as pricing, everybody's been messaging me. I've given you guys that have been paying attention the price, but if you do not know, for the first 100 people, you are going to get my course for $299, and that is also going to include lifetime access to my daily webinars. So every single Monday, Tuesday, Wednesday, and Thursday, and that also comes with the chat room as well. So every single Monday, Tuesday, Wednesday, and Thursday, I post a Zoom link to join me live for anywhere from 30 minutes to 60 minutes on a call very similar to this, but it's obviously private for my students, and I post that inside of a private Telegram that everybody that has my course will have access to as well. And it's very, very exciting in there. We share ideas, we talk, it's very good. So if you're trying to collaborate with kind of a higher level education, because a lot of people in there have been trading for a while now. There's been students that are in there that have been part of Positive Traders for multiple years now and gotten to a point of consistency. So it's a lot of fun in there. Well, it's not, I wouldn't say, I mean, it's fun if you're like talking about trading fun. I mean, we don't goof around in there. It's, fairly serious. We talk about trading, but, we a little bit of chatter about everything. So excited for that to come out, and yeah, excited to drop the course for you guys. I haven't had anything like that ever. I've been 5 years in the markets and I've never sold a course or anything like that. So especially having a track record and building the reputation I've built as being a profitable trader, I feel very qualified to be sharing this type of information with you guys, okay? But let's go ahead and look at the economic calendar for the week. This is going to be a very wild week, in my opinion, for some currencies. I'm not going to go over each and every single one of these red folders for the week, but just to point out some very particular ones. On Tuesday, we have a Parliament Brexit vote. So Miss Theresa May from Great Britain is going to be bringing her, basically proposal to Parliament and seeing if she can make Brexit happen, if she can get Great Britain to leave if they will agree for Great Britain to leave the European Union. And this has been going on for quite some time. I know a lot of people, if you may not have been around in the markets for this long, if I can go back all the way to that, let me go to just like, we'll pull up pound dollar, for example. You can pull up any pound pair. And this actually started back in 2016. So some of you guys may not have been around this long, but if you were, back in June of 2016 was when the idea of Brexit was originally announced. And a lot of people don't understand that Brexit wasn't over. We're still almost 3 years later, and still Brexit has not officially happened. So just something to keep in mind, that Brexit is a very long, drawn out process, and it's not even a guaranteed process. But more than likely, over time, it's not really a matter. In my opinion, it's not really a matter of if; it's a matter of when it happens. Miss May is very determined to have Great Britain leave the European Union. Okay, for those of you guys that are not familiar with the European Union, the European Central Bank, they control monetary policy for 30 different countries. Whereas, let's take the United States, for example, or even Canada, right? For Canada, you have, the Bank of Canada, which is a central bank, you have one country it controls monetary policy for, and that is Canada. The Federal Reserve in the United States, they are a central bank, and they control monetary policy for one country, and that is the United States. Whereas the ECB, the European Central Bank, is still one central bank that controls, but they control monetary policy for 30 different countries. So you can see how that can be very tricky, and the euro is a lot more complex in a sense. Okay. But going back to the economic calendar, so we have that going on Tuesday, a couple other things on Tuesday as well. On Wednesday, there's some more pound news. We have Governor Carney speaking from the Bank of England. We'll have a year-over-year report, consumer price index coming out for the pound. And then also on Wednesday and Thursday, we have the G20 meetings. Now, I'm not here to get into every single little detail. That's something that I go into my course, especially with what all these are, why they're important. But the G20 meetings is going to, you can also just use Google as your resource. There's so many YouTube videos on all of these different topics if you want to learn more. Just depends on how committed you are if you don't know this type of stuff. But we have the G20 meetings that begin on Wednesday, and they go until Thursday. And then Friday is, I say light, there's no like big monetary policy or anything going on, but there's still a couple things. We got some more consumer price index this time for the Canadian dollar, and then we have some more pound news or some retail sales for the pound. So it's going to be a pretty crazy week for the pound. I actually do have an outlook for the pound, even though there is all of these news, and I'm going to share that with you guys in just a moment here. Let's start off with the dollar index, okay? So just to kind of recap, I have had a bearish outlook on the dollar index since November 26th. For those of you guys that want to go above and beyond and really follow me on everything and really get like some deep insight, again, because I feel like I'm qualified to, because I have a track record, a positive track record at that. You can find me on TradingView, just my first and last name, David Schinkel. Last name is Schinkel. It's just my first and last name, and you can go see all of my different ideas on there. And I posted an idea back on November 26th expecting dollar index weakness. You can actually see the title of it right here, DXY weakness coming. And post that idea, we had a couple weeks where it just kind of consolidated. At one point, I had actually thought that maybe this idea wasn't going to follow through because of the lack of bearish pressure that we were getting, and maybe we were going to break through this neckline. And when I say neckline, for those of you guys that can't see this, let me go ahead and mark this out for you. This has been a very key level that we've been watching on the dollar index for a while, and that's been this inverted head and shoulders on the dollar index. And we've been watching this neckline. You can actually see this neckline goes all the way back, just happens to have that technical confluence all the way back to the lows of May 2016. And that is what this red ascending trend line represents right here, is the neckline of this inverted head and shoulders. But we did end up seeing the original idea of the dollar index failing around this trend line, and for the past couple weeks we've trended lower on the dollar index. Now, of course, that's great. We can always look at the past. Hindsight is always going to be 2020. In my case, I still have to take credit where credit is due. I did call this dollar index weakness a while back, long before it even started. In fact, we were still bullish at the time that I called it. We were at the highs when I called it. And where do I stand now? I know that's what you guys are the most interested in. Where are trading opportunities for the coming week? My opinion, and again, I don't know why I keep forgetting to say this. Usually I say this right in the beginning, but last week I forgot to do the same thing too. Guys, anything that you hear on here is not financial or investment advice and should be taken and should not be taken as such. Anything that you guys hear on me is just one man's opinion, okay? There's a lot of ways to profit in the market, literally tens, if not hundreds of thousands of different profitable strategies and different ways to look at the market and view the market, okay? So please, big thing is anything that you see on here is just an opinion. It should be used as informational and educational purposes only. And based on my opinions, you should not be risking your real money or even placing any trades on your own. Any trade that you place, it should be your own doing, your own bias, and let this just maybe kind of enlighten you or give you some information on maybe that you didn't see or maybe a different perspective, okay? But again, just biggest thing is I do not want to, and I still will not be responsible, and I still will have no remorse for somebody that just watches this and takes, if I say, I think that this pair could be bearish this week, let's say such as USD CAD last week, right? USD CAD, I said most likely this week we're going to see, you're always going to hear me say, I say like most likely, right? Because I don't want to say it's going down and all of you guys to just go play shorts on USD CAD. And this is something that I talked to my students about last week as well, that yes, this would have worked out great. Let's say on last week's webinar when you saw me call a USD CAD short and it going lower, sure, could you have just taken a short right at the beginning of the week, and over leveraged your account and some crazy lot size where you aren't using a stop loss and you have your entire margin at risk, and it worked out? Absolutely. You can see that right here. Would have worked out. But is that going to work out all of the time? Absolutely not. So please, guys, take what I say with a grain of salt and use your own risk. But anyways, going back to the dollar index, where is my opinion for this week? I think that it is a very possible opinion, or it's a very possible chance that the dollar index continues to run a little bit lower. Okay. Now I'm gonna just draw some lines for you. Again, these are not. This is a general idea. I don't think it's necessarily going to go exactly to this point, but I think that so overall this year, I'm expecting the Federal Reserve to continue raising rates. I'm expecting the Eurozone to most likely see some weakness throughout this year. That's something I discussed about with my students of why, from a very, very strong fundamental backing of why the Eurozone is weak right now. Maybe I'll go into that just a very little bit when I go onto the Euro right now, but I do think overall the dollar index will probably continue to follow the uptrend that it's been in since the middle of, we can actually see kind of like middle of 2018 in April-ish when we started this uptrend. So I do think that this uptrend will continue. However, for the immediate week, guys, and that's what these are for right there. It's called a weekly outlook. This isn't a monthly outlook. I'm not here. Like the title of this is literally weekly outlook. It's not monthly outlook. It's not yearly outlook. It's weekly outlook. I think this week we could continue to see some short-term downside on the dollar index. I think we could potentially see something like this. Now, again, do I think that it's going to go, could it go here? Absolutely. More than likely, a very good opportunity is for it to run all the way back down to 93.2, which if you have been following me for, years and years now, as I've been doing these weekly outlooks, or even if you're a student on my daily webinars, 93.2 has been a very significant level for us. And why I think that would be a good level for price to go to is because a lot of long-term buyers that are buying the dollar index either this week or that have been long on the dollar. We're talking people that bought all the way down here, guys. We're talking about swing traders that hold for, you can see if they bought back in February or March, they've been in this trade for almost 12 months now. That we're most likely going to see the dollar index run a little bit lower. And as price moves up higher, if you guys are following my cursor right now, for people that are long, I'm talking swing traders, like really, really long-term position traders, okay? Even potential, I would actually go as far as say a position trader, okay? In my opinion, or if you want to take like the textbook definition, generally speaking, a position trader is actually longer time frame than a swing trader, right? A position trader might hold trades for years and years, whereas that's the case for people that have buys. And if you guys don't think that there's anybody out there that is holding buys from February, March, April, or anything like that, there is. Well, we're not necessarily talking retail traders, right? Very few retail traders have the patience to hold trades this long. we're talking institutional traders. We're talking hedge funds. Those types of people that are having long-term position trades where they have literally thousands and thousands of lots in the market. That's because they are required to, okay? If you guys think that a hedge fund scalps on the 15-minute time frame, they do not, okay? And to be actually quite frank, for those of you guys that are not familiar with hedge funds or institutional trading or commercial trading, um, they are not allowed to trade technically. Okay, to get hired at a hedge fund to be an institutional trader, somebody that is going to manage, let's say, billions of dollars of clients' funds, you have to have a specific reason of why you're entering trades. And saying, oh, I bought off of this support, or I sold this bear bull flag, you're never going to get hired doing that type of thing, okay? Hedge funds, institutional traders, commercial traders do this long-term type of trading because, well, based on fundamentals, and they are forced to do because the market, even though it's a multi-trillion-dollar a day market, there's still a lack of liquidity for a trader that wants to put, a couple thousand lots on a pair for that order to be filled, right? Because there has to be somebody else or somebody, a liquidity provider or a clearinghouse or whatever is out there, other banks that are taking the other side of your trade, okay? So just a little bit of enlightenment for you guys that don't understand why these, and the whole reason why these markets are moving is because central banks are moving markets back and forth, right? It's not because a bunch of us retail traders got together and decided, okay, we're going to short the dollar, so it's going to keep going lower. No, these moves have been planned out. These, banks know kind of what is going on. I mean, not kind of, they do know where the markets are going, okay? So kind of understanding that idea and understanding how big money works, a lot of people that have buys, and when I say people, again, I'm talking institutional traders, commercial traders, those people that have thousands and thousands of lots of buys on, let's say, the dollar index right now, or the US dollar, which subsequently is a short on Euro USD, which we're going to look at in just a moment, which is the main whole thing here, right? The dollar index, this is just an index. The Euro USD does the exact opposite, right? If we show Euro USD on here, and we just were to put Euro USD in, right? Let's go ahead. We'll just change this to a line for now. Boom. This is Euro USD. So this line is a Euro USD. It's literally the exact opposite of the dollar index. So anytime you hear me saying, I'm expecting like this is a potential move on the dollar index, well, what do you think is going to happen to the euro? Well, what has to happen to Euro USD, because the weight of the dollar index is made up about 57% of the euro. Okay, so they have to do the opposite of each other. There's no ifs, ands, or buts about it. That's why they are literally an exact mirror image of each other. But we'll get into that in just a moment. So the dollar index, the whole point I'm trying to make here, and I know I keep going off on a tangent on a couple things, but it's just to make, for all of you guys, so all experience levels, this makes sense, that the stop loss for those institutional traders and commercial traders are going to be somewhere a little bit below this zone. Okay, a little bit below this zone that I just marked off with this blue box. Okay, so it'd make a lot of sense for price for the dollar index to move towards the 93.2. But as we get into the year, as the year really starts to get going over the next couple months, and we start to see some rate hikes come in, and we start to see what kind of is going on with the situation with Europe as that begins to develop. I believe we're going to continue to see the dollar index move up higher. We'll eventually most likely see that neckline on the inverted head and shoulders that we just looked at break. So this here is a very probable scenario, in my opinion, for the dollar index. Okay, again, this is all my opinion. Okay, I could be completely wrong, but this is my opinion. Okay, Euro USD. So obviously, if we just looked at the dollar index and I just talked about it running the supports, stop loss, and we're talking about all the commercial traders that were long, well, then we're talking with Euro USD. What we're talking about is all of the commercial traders and institutional traders that have been holding short positions since back in here where my cursor is, since between January of last year, the start of last year, and April of last year. People that have been short and holding shorts this whole length. A lot of those commercial traders and institutional traders are going to have stop losses just above this area right here, okay? So inversely to the dollar index, it would make a lot of sense for Euro USD to continue moving up higher. And in the short term, at least, we're talking, this could be 2 weeks, this could be 6 weeks, this could be 12 weeks. I am not guessing on how long the development of this essentially a stop hunt for commercial sellers in the market would be. Okay, but I do believe. Oh, so I don't know why that was that color. I think it's because I picked trend line instead of arrow. But I do believe that most likely some sort of move like this would happen. Okay, now I want to be very clear that this outlook could definitely change. Okay, because we have been very consolidative. Price has been consolidating in a very strong pattern since the end of October on Euro USD. We essentially have a giant bear flag that's going on the Euro right now. So if we don't start to see, especially kind of where on the daily, where this trend line is descending right here, and where price has tested last week, if we don't continue to see bullish momentum and we don't continue to see last week's highs break over the coming week or weeks, and we don't see this bullish momentum, then we're going to kind of I would consider this trade idea invalidated. Okay. So very important to watch. But also for those of you guys, I noticed that there were some people in the chat, some people even said that they were new here. Just to give you guys some type of credibility of why, again, I'm sorry to toot my own horn. I'm not trying to sound arrogant. I am just trying I know that there's all walks of people that watch these. Some of you guys have been veterans and have seen this a million times. Others of you, it's your very first time ever watching any content from me. So again, I want to provide some sort of substance for you guys of why I feel justified to be able to provide this type of information for you guys. This is just one example on Euro USD. Back in September of 2013 of what I was expecting Euro USD to do. And I said I was expecting some sort of break in here. Now, did it get all the way up to 119? No, we were still about 100 pips off. Actually about 75, only about 80 pips off of where I was expecting price to go towards, or the general area. But you can see, I mean, there's a very clear idea of price moving up higher and then a big fall down. And that's what was expected, and that's what happened. Okay, so just to add a little bit of credibility to and substance to what I'm saying right now. Pound dollar this week. If you guys are a student, you guys are in my group. This is a pair that we are going to be most likely trading this week. I know a lot of you guys might be thinking, oh my gosh, there's all this pound news, and pound's going to be very volatile. That's it's a double-edged sword. Volatility is good as a trader. Volatility is what creates a trendy environment, a trending environment, and a trending environment is what we like to trade. So what I'm going to be discussing right now on the pound dollar is strictly a technical outlook. Okay, I do definitely am aware that Tuesday we have the parliament vote for the pound. Now, it's not just black and white, guys, okay? I want you guys to be very clear here, okay? And this is some super nuggets. By the way, just to kind of little side note, for those of you guys that are watching this right now, I answer any questions that are in the chat live. I don't get them to them like right when you ask them, but before this is over, I will find a time. I will obviously find some time to answer your questions. So if you're watching the recording and you don't usually watch this live, that's the advantage of watching this live. You can literally ask me any question live. I am an open book and I'll answer it for you. But one thing I want to talk about is a lot of you guys, retail traders, right? That retail mind. You're gonna see the outlook, right? And you're gonna see Parliament Brexit vote. It looks like they're rejecting it, right? So in your head, you're probably like, okay, well, that's not going to be good for Brexit. They're going to reject the vote. Not true. If they reject the vote, it's not going to be good for the pound. Not necessarily true. It depends on what type of commentary they release along with that vote, okay? Because generally speaking, the pound coming to a decision or an agreement with the European Union of how it's going to leave is that's still positive news, right? Because the market has been the market, I guess you could say, but I guess we could say the central banks have been kind of in limbo for a while now, since 2016. It's like, okay, is it gonna happen? Is it not gonna happen? How close are we getting? So the closer we get to the pound actually um, achieving its goal, which is Brexit happening, it's going to be better and better and better for the pound. So, a lot of this information, and this is why I'm not a huge fan of the economic calendar at times, because a lot of this stuff is set here to deceive you as a trader, right? I mean, think about it. Like, you think that the central bank, I mean, I'm kind of being satirical here, sarcastic, that if you think, like, you can't actually think that central banks, the people that know where the market is going, don't know that we see this as a retail trader, right? And they know that a trader that's brand new or a trader that doesn't have a lot of experience in the market and doesn't understand these types of things is just going to look at the charts and be like, oh, there's some high impact news coming out for the pound on Tuesday, and they're going to be rejecting it. So I'm just going to, over leverage my account and throw a fat short on pound without any sort of stop loss. And I'm just going to solve all my problems and make $1 million this week and be good, right? Obviously, I'm being a little bit sarcastic when I say making $1 million, obviously, depending on your account. I hope if you have some serious money that you're trading with, like, high 5 figures, multiple 6 figures that you're trading with, like myself, that you are not taking it as a joke and you aren't trading with that kind of money, especially if you don't understand these types of things. Seek out some counsel with that. But yeah, that's just to put it simply. Don't think that it's just an easy short on the pound come Tuesday when they reject the vote, okay? So getting back to my technical outlook, is very bullish for the pound right now. We've seen 2 strong bullish weeks for the pound. It kind of struggled for a couple of weeks, and then after that flash crash, we saw a very long wick created on this weekly chart, weekly candle, and then we have, this is just something I don't really put a lot of emphasis on this specific trend line. I'm not even a big fan of trend lines to begin with. I don't rely on trend lines too much. Trend lines just tend to add, a small bit of conviction to my trades on occasion. But main thing that I'm looking at is, you guys can see this blue box, this main blue box extending to actually post-Brexit. So this also is showing June of 2016 when Brexit happened. Some of you guys may have been in the market, some of you may not have been, but after Brexit, it consolidated for a while on the weekly. And then this was actually a flash crash. This was one of the other flash crashes that happened. So you guys, I'm sure all of you guys are here, unless you started trading like within the past couple of days. We're here for the flash crash that just happened on across the pairs at the beginning of the year. I believe it was like the second that it happened. But there was an even bigger flash crash on pound pairs back in October of 2016, a couple of months following the original Brexit. Okay, just to give you guys a little bit of history. But this is a very significant level. You guys can see very, very significant resistance. You can see very significant support in the past. It's even been support of last year, around last year's lows, before we made even lower lows back in December, November. And we are back above that range right now, or back above that level right now. So, and let me just drop this onto the daily just so you guys can see. We've been fairly consolidative, right? With the exception of the flash crash that sprung way below price. And I actually say sprung because this actually is a form of a spring, for those of you guys that are familiar with the Wyckoff theory and understand, an accumulation period followed by a spring, followed by a markup period, then a distribution phase, then a markdown period. If you have no idea what I just said right there, if those last 5 seconds were complete, like a foreign language to you, that is something I cover. I mean, you can literally find all the information that you want online. I mean, and that's kind of how it is at the end of the day, not to like diverge too much, but like literally, guys, I'm self-taught. Everything I've learned is through personal experience, chart time, like that sweat equity, but also finding all information online. I mean, obviously, I would have loved to have a mentor that had a course or something like that could have pointed me in the right direction. That would have reduced my learning curve in half. But if you really want to do it the long way, you really want to do it the hard way, and none of you have a mentor, which I hope all of you guys see me as a mentor in some way or another. Every information that you want to find out is online. It's just knowing the right places to find it. But I'll tell you right now, going through Baby Pips right now is not going to teach you how to trade. Okay, Baby Pips is a great place to learn the basics and to learn like general like terminology and things that you need to know. But if you think you just went through Baby Pips and you're going to be some professional trader after Baby Pips, like, you definitely have another thing coming. Okay, you need that sweat equity and that chart time. But you can definitely see on the daily here we have this consolidation followed by the spring, and I believe we are about to enter a markup phase for pound USD. So this is a pair that I think this week could offer and yield some good opportunities to the upside. Obviously, I went over Euro USD, so everybody should have an idea of what I'm looking on for that. Now, as far as where can we work with a maybe a smaller time frame trade, maybe getting into a trade somewhat soon. For me personally, definitely going to look for a retracement on this breakout. Maybe we will come and retest. And I say maybe because, like, you know, I don't even know what's going to happen in the market. Yes, I consider myself a professional. I definitely trade full-time professionally. But do I always have stuff to learn? Absolutely. This is not where I want the box to be, guys. I'm just changing the color of it very quickly. Right here. And kind of let's do this a little bit and let's bring this down to right here. We could see definitely a retest of this resistance, the top side of this channel that we were in for some time, since pretty much the beginning of December to now, almost a whole month, and we are breaking out of it. So guys, I mean, this is literally so much free value right here. I hope you guys understand, like, how, like, I mean, come Friday, we're most likely going to see pound dollar higher. You know, and it's, I mean, it's just this, that's my, again, my opinion. Have to give you that disclaimer. I already gave you guys my disclaimer, but I have that this is what I believe is going to happen. Okay. Now this is another pair I haven't looked at in some time, but I'm really liking the technical analysis on this pair. I'm really liking the way this pair is moving. A couple things also, I'm a big fan that overall my bias is short on the euro. Long-term bias is short on the euro. And also, very quickly, one thing I did not touch on was gold. I believe that the commodities are going to do very well this week. The commodity, I mean, not this week. I mean, maybe this week, but this year. The commodities market is going to do very well this year. I believe gold, and I've said this before, so this is not new for anybody that has been paying attention. I think gold is going to have absolutely no problem breaking out of the multi-year range that it's been in and breaking specifically the multi-year highs. So around this 1375, let's just call it 1400 for all intensive purposes. This 1400 range that gold has been in, this 1400 top that gold has seen for some time, I think that gold is going to have absolutely no problem, especially once the stock market starts to fall, as I believe it's going to. I mean, it only really makes sense that the stock market falls. For those of you guys that are not familiar with the correlation between the U.S. dollar and the stock market, it correlates directly to monetary policy. And generally speaking, just a little like fun fact for you guys, those of you that don't know what monetary policy is, that's interest rate decisions. Okay, and I mean that's central bank rates. And generally speaking, when central bank rates are higher, when interest rates are higher, that leaves smart investors, the people that invest into the stock market, less money to invest. So we usually will see stock markets lower, right? And when the interest rates are lower, that affects everybody going down to a retail trader. There's generally more money to that you have to invest with because interest rates are lower, and you usually tend to see the stock markets rally. So the strength of the U.S. dollar, or we can say monetary policy of the Federal Reserve, is a direct, or I mean that goes for any central bank and stock market, right? Like the Australian central bank. I don't know why I'm blanking on the actual acronym of it, but you guys know what I mean. Australia's central bank and the Australian stock market, or the ECB and the UK stock market, or the Bank of Canada and Canada's stock market. Like this is the same principle across the board. So that's kind of, hopefully you guys are putting two and two together and you understand my outlook on the stock market. And so as that falls, as we see euro, in my opinion, not perform that well this year, and we see some money taken out of the stock market, I think we're going to see things like gold, and we're going to see things like oil probably rally throughout this year. So that's my little take on gold. But at the same time, the reason why that's relevant to euro JPY is because the yen is considered a safe haven currency, just as gold. I know gold isn't a currency, but gold is considered a safe haven, right? There's a particular there are specific instruments that are classified as safe havens, gold and the Japanese yen being a couple of them, okay? So all of you guys should know, and if you don't know, you need to go back to Baby Pips, you need to learn, and I really hope you aren't investing real money if you don't know this, that looking at this chart going down, that means that the euro is weakening and the Japanese yen is strengthening, right? That means at the same, there is a simultaneous pressure of, or at the same, the euro is being sold at the same time simultaneously as the Japanese yen is being bought, okay? And so that's just like the fundamental backing for this trade and everything. So just to now to get into the technical side of things, we see a very strong level of support, which I'm not talking about this trend line, by the way. This trend line just adds, again, it just adds a little bit of conviction. I'm talking about this blue box right here. I'm talking about this blue support zone that we've seen, where we've seen some demand for EJ in the past year has been broken. Okay, and we look at this on the daily now. We've broken it. We've actually come up for a little bit of a retest. Now, this could get a bit complex. I am definitely not saying, guys, again, please, I don't know how many times I have to stress this. Hopefully not too many times. Don't just take a freaking sell on this, right? Because I'm not liable for it. And if you blow your account because you over leverage and you just listened to me and took a short, like that's totally your fault. Like that is, I have zero remorse for somebody that's going to blow their account. Because if you don't, I mean, to begin with, if you don't have good risk management with your trading, then you're listening, specifically that point, if you're listening to somebody that is a professional trader telling you how important risk management is, and you go and you do the opposite of that, then you deserve to lose your money in this market. You are not respecting the market. And when you don't respect the market, it'll eat you alive and you deserve to lose your money, okay? Now, do you deserve to lose your money if you're using good risk management and you're following a proper process and you have a strategy? No, you deserve to make money long term because that is your end goal, right? You don't trade to lose money, you trade to make money. But if you are not respecting the markets for what they are and you're over leveraging, trying to get rich, thinking one trade is going to solve all your problems because you see somebody on Facebook or somebody on Instagram that just posted a screenshot of making $20,000 last week and they have nothing but a MetaTrader 4 screenshot where they could have just taken two demo accounts and bought on one account, sold on the other account, and whichever one they were up $20,000 with took a posted that screenshot and have no credibility, well, then you deserve to lose your money, okay? But EJ, this could get complex. We could see it actually do a bit of a retest up to, move up higher. But in my opinion, as far as any euro, I mean, not any, but most euro pairs, including the Euro USD and Euro EJ that we're looking at right now, the higher these pairs go, the better opportunity we're going to have to sell, the better price we're getting to sell long term as the Eurozone falls apart, okay? And that is my opinion, all right? So EJ, this week, just be careful with EJ. So this isn't maybe necessarily a weekly, I mean, this is still a weekly outlook. I think we could see a bit of downside, but if you're trying to swing trade this and just take a short from right here, just be a little bit careful, okay? I think we could potentially move up a little bit higher before going lower, okay? And that, ladies and gentlemen, let me go to the questions that we have in here because I promised you guys I would give you guys my outlook on all four of those. One thing I will just look at very quickly, I know a lot of people I've seen on social media, a lot of people are just looking at doing things like buying USD CAD right now because it's so low. Well, I want you guys just to take a look at oil very quickly, which has a direct correlation to USD CAD. I've gone over it many times, okay? Canadian dollar strength is a direct relationship to demand on oil, okay? And US oil bounced off of this range, very significant range. I mean, very, very, very strong level of support, very strong demand for oil in this area. We saw a bounce a couple weeks ago. It's rallied since, and I don't think this rally is done. I think oil will continue higher, and that should add appreciation to the Canadian dollar over the coming weeks, which means that we should continue to see USD CAD fall. For those of you guys that are on the lower time frames and you're looking at USD CAD and you're like, oh, it just made a strong move up and it's making a bull flag on the 1 hour, you're gonna lose money, okay? Or in my opinion, you're gonna lose your money. All right, don't think, guys, don't take the. It's like it's something like, I don't know how to explain it any other simply put than just because you see it, it's not like you're just like some secret. It's not, seeing this bull flag on the 1 hour isn't a secret, guys. There's somebody that runs a central bank that has their charts open that sees this right now and sees, oh yeah, all these retail traders are probably gonna be buying USD CAD. They have no idea about the fundamental drivers of this pair, which is, in my opinion, oil, more than anything, of what's actually happening to this pair. Okay, so don't think that the markets are easy money. Okay, the minute you start taking the market for granted, and you start to think, oh, this is easy money, I got this, and you get overconfident, that's the day, or that's the week, or that's the year you'll blow your account and lose every single dollar in your account. Okay, you need to respect the markets. You need to always use good risk management, guys. That is why I am successful long term. It's not because I'm some amazing trader and have this magic crystal ball and always know where the market's going. Guys, if you're a student of mine, you've seen me be wrong, guys. We took a losing trade last week. We are wrong. I am wrong a good majority of the time too. I'm not even trying to say I have a 90% win rate, an 80% win rate. If you're following somebody that boasts about win rate, that's a huge big red flag. Win rate does not matter. If you are following a trader, you're following a Telegram group, you're following somebody online that harps on their win rate, and they're like, well, I'm such a good trader because I have a 90% win rate. That is a huge red flag, and they are most likely trying to finesse you for money, because win rate does not matter at the end of the day. You can be a 20% win rate trader, you can be a 30% win rate trader, you can be a 40% win rate trader, and you can be making tens, hundreds, millions of dollars, depending on your account size, that amount of money, and be an extremely profitable trader long term with a bad, what's perceived to a retail trader as a bad win rate. Okay, it is not about your win rate at the end of the day. It is about your risk management and your risk to reward. And I truly believe that. And I believe it because I'm living proof, guys. Okay, I'm literally living proof. So let me go ahead and answer some questions for you guys real quickly. Hype for it, awesome. What's good, guys? Good to see you all. Red Devil says, I learn every time I watch you. I'm really glad to hear that. You are the exact person of why I am here doing these for you. Madi says, do you prefer Forex.com or Ameritrade? There's so many good brokers, good CFTC and NFA regulated brokers that you can use. There's Forex.com, there's Oanda, there's Ameritrade, which is a part of TD Bank, so TD Ameritrade. There is Interactive Brokers. There's also actually a lot of other brokers that aren't like super well known that are regulated by the CFTC and NFA. I don't want to I'm not going to be here, and I don't want to push a broker. All I say is, do your own research, make sure you're with a regulated broker, make sure you know your money is safe, this and that, and you just do your DD, your due diligence, before jumping in anything. Red Devil says, could you show how to use Fibonacci, please? I feel like I don't use the tool properly on TradingView whenever I try to use it. Red Devil, unfortunately, as much as I would love to, this is just a weekly outlook. I could spend hours on teaching every single thing. That is definitely something that is covered, 100% something that is covered in my course, though. Or like I said, you can find all sorts of free information online. But Fibonacci tool, you really should understand how to use a Fibonacci tool, definitely, because it's very helpful. Fibonacci is used in all walks of life, not just trading. It has but very strong relationship to trading. And Anthony, you asked, would you consider putting a buy stop on gold above 1300 and ride it around to 1355, then get in again after it breaks that high and take it to 1700? Me personally, not necessarily. I don't think I would like to buy gold at those highs, because if it does break 1300, that means I would be buying at a high, which I'm not a big fan of doing. There are, if we have the right fundamental backing and the risk to reward is there for it, possibly, but I don't want to give a definitive yes or no. But I will tell you for sure, my long-term outlook on gold is it moving higher throughout this year. It is possible, in my opinion, let me just I guess I can say something on gold very quickly. My preference on gold would be, let me just kind of remove this really quickly and kind of take the new fib that we have on the current uptrend that we have. I would like gold to make some sort of retracement first. You know, I kind of feel a little gypped. I think this would have been a great entry on the 1200, right? We saw it consolidate. We had taken a buy too. We definitely made money on gold, right? We originally, those of you guys that were in the group, we took a buy on gold around 1183. We almost bought the bottom. And for those of you guys that think I'm just blowing smoke right now, I'm not. I mean, I'm not going to lie to you guys. And I mean, I have students in here that can go and fact check me, right? It's you can scroll through the Telegram and fact check me if you're a newer student as well. We bought gold at 1183. And we had a stop loss on gold at, I think it was like 1178. I don't remember the exact stop loss. I know it was like 50 or 60 pips our stop loss was. And I've been bullish on gold for a while. I've been expecting gold. I think definitely got a little bit gypped right here. This would have been the best entry, is entering at 1200. I mean, you'd be in almost 1,000. You'd be 920 pips in profit right now on gold. But yeah, I mean, I would like to look for some sort of retracement on gold before it moving higher. Okay, so that is that. And Madi asked a question, but message was retracted. Okay, so guys, that is that. I hope you guys were super informative. Madi, I kind of briefly looked over. I didn't read the whole thing, but I did see the word course in there. If you have a question about my course, best way to get a hold of me is on Instagram. It's just my full name, at David Schinkel, Shinkel. If you start typing in David S, I'll probably be one of the first ones that pop up for you on there. But other than that, guys, that's this weekly outlook. Get ready for Tuesday. Those of you guys that are looking forward to the course, it is dropping Tuesday. I don't know the exact time yet. I still am working on the landing page and the teachable landing page and getting all that set up. So I need to make it look that nice and neat. And I actually also have 2 more lessons to film before it is completely finished. But I think I have plenty of time to do that. It's still getting released on a Tuesday no matter what. And other than that, guys, have a really safe week trading. If you guys are getting into anything, make sure you use good risk management. I'm not liable for any of you guys' losses. If you have any other questions, though, feel free to reach out to me on social media. Everybody else, or students,